Did you know that OpenAI co-founder Sam Altman owns 8.7% of Reddit? Sam Altman has a long history with Reddit. He's been the CEO for 8 days, he's been on their board of directors, and he's their third largest shareholder, even to this day. And does that mean that you should invest in Reddit as well? The company is about to go public in a matter of days. There's no direct way of telling which way the IPO is going to go, but we do have a lot of information that we can sift through. What's really cool is Sam Altman recorded his thoughts in a blog post 10 years ago when he took that initial position. So in this video, we'll take a look at that, as well as their S1, to see if Reddit is still a possible buy today. This is interesting for us as investors, as we get to see exactly what his initial thoughts were when he took that position, and see if that investment thesis still holds up today. This could help us figure out if there's something inside of Reddit's IPO. Sam Altman is arguably the most important person in technology right now, and if he's bullish on the company, then that's a really good signal in my opinion. We'll get to that as well as we go deep on our analysis of Reddit, including walkthroughs of their S1. But first, if you like this comment, please like and subscribe. We release new videos weekly that go deeper on business and stock analysis than just about anywhere else on the internet. Let's dive into it. Okay, as we said, this was posted in 2014 by Sam Altman and is on his personal blog. He says that he's excited to announce that he's investing in Reddit, and it's through a personal basis, not through Y Combinator. And he says basically that he loves the product, that he uses it more than any other social media site, including Facebook, Google, and Amazon, and that the founders were in the first YC batch with him. He claims that he was the first dozen users to use the site, and that he uses it all the time and loves it, which is a great reason to invest in a company. He talks about how it's an important community for him, and it's an important website for him, and he points out that he thinks that over the course of several years, Reddit could have close to 1 billion users. We'll dig through their S1 and see what that number actually turned out to be. They talk about some other cool things. Their Series B investors are giving 10% of their shares to the people in the Reddit community. And they're doing that again with this IPO. Some of their highest moderators are getting offered shares. And then he also mentions that he's given the company a proxy on his Series B shares, and basically saying that he's giving up some voting control so that the people running Reddit can protect themselves against corporate activism. It's a short post, as can be expected since it's talking about a pretty large interest in a company, but it does have some key takeaways. Namely that he thinks the company could have 1 billion users on it, and that he loves the product and has spent a lot of time using it, which again is a great reason to invest. All right, now that we know a little bit about the history of Reddit, let's get into the fun part, the business. If we go into the SEC's website, we can then click into their S1. And just to point out the difference, you'll see an S1 listed here and an S1A listed here. The difference between the two is the amendment will fill in some of the key details. Just as an example, the original S1 didn't include any information on when it was issued or how many different shares of stock they'll be issuing. And you'd see that around, it's just not complete because they don't have that data available, which then the company will go in and file an S1A, which then has a lot more of that information filled in. So in this video, we'll be continuing on with the S1A. Okay, so this is the company's S1. This is their intention to go public documentation. It's the first time that we'll be able to see behind the curtains and actually get our idea of what the company's financial condition looks like. The first thing I wanted to bring up was the letter from the CEO. Namely, he points out that they have 76 million people on average visiting per day. He mentions that it's important that the users can either be revealed or that they can remain anonymous. And then this paragraph here, he talks about some interesting things, and it comes up repeatedly in the S1. He compares Reddit to being a city, and each one of their large subreddits he calls neighborhoods. And they have 100,000 subreddits right now. And each one of those neighborhoods has their own slang, vibe, sense of humor, and both written and unwritten rules. And then I think the key sentence of this whole thing is that he mentions how they plan to grow in the future. You'll see it again and again, but those 3 major avenues are through advertising, monetization of commerce on the platform, and licensing data. And then we get into the prospectus summary, and they open up with their mission statement. And I like to study mission statements because it helps you see vision. And their mission statement is to bring community belonging and empowerment to everyone in the world. Okay. I like to compare this to a company that I think has created a lot of harm in our society, and that's Facebook. And Facebook's mission, as seen here, is to give people the power to build community and bring the world closer together. Or what they should have said is sell all your freaking data. I don't think either are good mission statements and really tell you why the business is there. But let's keep going on what the business has in store. They talk about some of the basic things, basic use cases, why people are on Reddit. But then the first thing that I found interesting is that when they start to highlight why they're a good advertising vehicle, which is right now the way that they primarily make money, in a survey, 75% of respondents said that Reddit is a trustworthy place to inform their decisions on whether or not they're going to buy a new product. They later go on to brag that they're a high intent site, and I think that's actually pretty useful. If you go to the subreddit camping, there's probably going to be a high chance that you would buy a new piece of camping gear based off of a recommendation that you got from Reddit. If they can narrow that bridge, then that could be a large revenue source for them. Their second new business model, as the CEO noted in his letter, is to start selling training data for large language models. And then the third, and you haven't really seen this one yet, is that they will offer like a payments platform. They mention the subreddit Photoshop requests, where you can request Photoshop services for payment, kind of like a Fiverr. Just to go back into them talking about growing user base, and if Altman's dream of 1 billion came true, they have about 300 million weekly active users unique. And so he probably was close to that 1 billion. If that's a weekly active user, their monthly active users or yearly active users is probably around 1 billion. So good job, Sam Altman. Way to look into the future. The other ways that they think that they can grow is by elevating conversations and video. With the TikTok ban possibly going through, this could be an interesting play. They also say that they want to modernize search, but their last growth metric is really interesting to me. They talk about growing their international user base, and they say that 50% of Redditors came from outside the United States. However, over 90% of all Reddit posts were made in English. With UI coming online, this could be a lot easier for them to have an international presence. And so here we have the discussion on why advertisers come to Reddit, which again is how they make their money today. But they come on Reddit to find high intent customers that they're not able to reach on traditional forms of social media. They continue to list out a couple other ways in which they intend to grow, but nothing really stuck out to me. And then they give you this multi-growth chapter. And if you want more details on these, you can look above this section where they call out each one in particular. But basically, their growth strategy is advertising what they have currently, will be emerging, and then what will be in the future, so that they will always be an advertising platform. But then they talk about their data licensing model. We already have a test case of that, giving their data to Google for a reported $60 million. And then in the far future, they want to become a marketplace. This is kind of a cool idea. I just have to call it out before I go to the next page. A collectible avatars program is not a way for a company worth billions of dollars to move the needle. It was dumb of them to include that. They go on after their growth strategy to start talking about how large each of these markets are. And this is where it gets ridiculous. They say in 2027, they address the total digital marketing space to be worth $1.4 trillion, and that will grow at approximately 8%. TAMs are one of the worst business metrics to determine a business's viability. Just because the total addressable market is something doesn't mean that they'll be able to have 1, 2, 20, 80% of it. It doesn't tell you how you will capture it. I don't like TAM or bottom down analysis. They talk about how data licensing will continue to grow. And again, they expect the broader AI market to grow at a CAGR of 20% to $1 trillion by 2027. Okay, cool, but how is Reddit gonna capture any percent of that? And again, just to put another cherry on top, they talk about the total CAM of e-commerce. And they expect it to grow 12% to $2.1 trillion by 2027. Again, they don't give any information on how they plan to take that market share away from Amazon, who currently dominates e-commerce, as we all know. Okay, and then we have a little bit on the offering. They're doing 15 million shares. They're breaking it apart into different ways. We can do a governance video later if you'd like. Their structure is pretty interesting. There wasn't really anything that broke my mind on it, and I want to talk hard numbers. So we get into the juicy part, their income statement. So they grew revenue by about 20%, and their cost of revenue didn't go up too much. However, their research and development did. And with research accounting for almost 50% of revenue, that's a red flag. That doesn't make sense that a bulletin board company would have 50% of their revenue going in as a cost. They either put things there that don't necessarily belong in research and development, or the company is not an effective business model to continue growing. And then our least favorite thing is they are operating at a pretty significant loss. They lost $90 million of income in 2023. And of course, they'll try to soften that blow by offering you an adjusted EBITDA. Whenever you hear the terms EBITDA, just think bullshit. And I'll show you why. If you scroll down, you can see how they break down adjusted EBITDA. They added back in interest expense. They put in their tax expenses, Depreciation, amortization, okay, this is not really that big of a deal. Oh, what's this? Almost accounting for 50% of it? Stock-based compensation, expenses, and related taxes. Just through this vehicle, they're paying themselves $50 million. So adjusted EBITDA is bullshit. Stock-based compensation is a very real expense, as is depreciation and amortization. So is your tax expense. It makes no sense. I hate adjusted EBITDA. If we look at their total assets versus total liabilities, it's actually pretty good. They have 1.5 billion in assets and only 155 million in liabilities. Okay, so in conclusion, I expected more out of a 18-year-old company. This company was founded around the same time that Facebook was, and Facebook has found a way, although immoral, to find a lot of money during that time. Reddit doesn't, and I don't think that they're necessarily on the precipice of finding their cash volcano. Currently, their daily active users is only 2% of Meta's, and their executive payout is way too high. I wish they would have IPO'd sooner. When their valuations were 500 million or so, then this could have been a buy. But right now, and we've seen this time and time again, IPOs are just ways for executives to cash out, or private market investors, venture capitalists, early and late stage, to cash out and put it on the back of retail investors. This is why we're getting smarter as retail investors. We're actually looking into the numbers so that we don't just go, oh, I use Reddit, let me invest in it. This company doesn't have much going for it. I'm very bearish on it. And so I'll close out by using community just the way Reddit was intended. A Reddit moderator named Dan summed it up perfectly. He said, quote, "It's Tumblr all over again." Executives look at a highly engaged community and think there's gotta be a way to squeeze money out of this, but maybe there just isn't.